Okay, so let's start. So hello and a very warm welcome to everyone who is present in this class. I will shortly discuss the flow that what basically we are going to discuss in this class and how it will help you. And after that, we will formally start the session. Now, I have shared a link of WhatsApp group, and that WhatsApp group must be joined by everyone. There are few reasons why I am saying that WhatsApp group must be joined by everyone, because sometimes during the webinar, there is a general tendency that there is a connection problem from students' end, or there is a connection problem from my end. So sometimes what happens is we get disconnected. So in case we get disconnected, how will we connect further? So that's why I have shared with you the link of this WhatsApp group. And in case there is any discrepancy, we can connect with each other via that group. Secondly, after the class, there are many people worried about whether the recording of this session will be shared or not. Even I have received 4 to 5 messages in the chats as well that whether recording will be shared. Yes, recording will also be shared in that WhatsApp group. So it is advisable that you join that. Plus, it's a very helpful discussion tool that you see there is around, I think, 8-9 days left to your exam. You people can discuss in that group, and maybe I can share some material if anyone is having problem in that. Okay, so let's formally start this session now. Now, what is the objective of this session? Firstly, now you all know that if I talk about the audit and assurance exam that you are about to sit in your March attempt. Audit and assurance exam is based on 2 sections, right? In the first section, section A, is MTQs or OTQ section, objective type questions or multitask questions. And the section B is a long section of 70 marks, right? In which we have 30 mark question number 1, then 20 marks, then 20 marks. Okay. Now, since I have been teaching this exam since I think last 8 years maybe. And in the last 3 or 4 years, there are 2 times that our students have secured the highest marks in the world in this paper, not in Pakistan, highest marks in the world in this exam. And in 2021, if we talk about all 4 attempts, maybe out of all those 4 attempts, 3 attempts, I guess I remember, there were students which secured highest marks in Pakistan in this exam. So why is the case that students have secured highest marks in the world and highest marks in Pakistan? Obviously, it is something effort of the students as well. I think sometimes I believe there is more effort in students' part as compared to teacher. But we highlight that what is the problematic area. Now, you won't properly tell in front of me or accept in front of me, but this is right, that students don't find too much difficulty in section B, the 70 marks. They find difficulty usually in section A, that is MTQs, right? And in MTQs or OTQs, the biggest reason of problem is that students say that they have very less material to practice because sometimes the MTQs are not published. So you don't get an idea. The teacher also doesn't get an idea of what to do as regards the MTQ is concerned, right? And even if it is published, you know that there are 4 attempts. Every quarter there are attempts of audit and assurance exam or any exam, but the papers are published of only 2 attempts, hybrid sample exams. So that's why you don't get an idea of what exactly is coming in the exam. So basically, this session which I've planned will be focusing on MTQ practice. Okay, I have gathered some exam style MTQs which I will explain to you and solve with you in today's session. Most likely we will be solving 3 detailed MTQs, and you know every MTQ carries 10 marks, 5 requirements of 2 marks each. Okay, and hopefully once you practice this, you will definitely have an improved version of yourself when you will be answering MTQs. Okay, there is one question from a student that which areas MTQs come from. Dear, no one knows this. Okay, when you talk about MCQs and MTQs, the biggest challenge in MCQs and MTQs is that they come from across the syllabus. And when you talk about across the syllabus means it can come from any area, and no area you can afford to skip or lose. Okay, so let's start it. Okay, I will be showing the MTQs on screen, right? But there might be some people who want a file on some separate device, or they might be watching on 2 devices. So I will be sharing the Word file of MTQs on the WhatsApp group as well. So kindly, again, I'm sharing the link of that WhatsApp group. Those who have not joined, please join the group so that I can share the file with you as well. And once I share the file, we will start it. Okay. Okay, so the file has been shared in the WhatsApp group. I will show these MCQs on the screen as well. But just for some people want it separately on your device. That's why I have shared this. Okay. And now there are people who are joining the group late as well. So whole and soul, this is going to help you in MTQs preparation. And for the long questions, we will just give you some details in the end. Sharing the WhatsApp group link for the 4th time. Please join it. इसी ने तो बचाया इसको. Okay, come on. So now I think we should start. Okay, you can open the file which I have shared with you on the group. Also, you can see the questions on the screen. So I think now we should start. Okay, the first MTQ which we are going to discuss with you. Okay, the question states, it is 1st July 2005. Please pay attention. It is 1st July 2005. You are an audit supervisor of Willow and Company. Now, if the question states that you are an audit supervisor of Willow and Company, the question states you are an audit supervisor of Willow and Company, that means you should be clear with yourself that Willow and Company is the audit firm, right? If you are an audit supervisor of Willow and Company, so Willow and Company is the audit firm. And you are involved in the audit of Ash Company. So Ash Company has to be the client, right? You are an audit supervisor of Willow and Company. So audit supervisor is of audit firm, right? And you are involved in the audit of Ash. Ash is the client. For the year ended 31st May 2005, you have been allocated responsibility for the audit of bank and cash and share capital. Okay, so your responsibility is to audit bank and cash and share capital. Okay, first heading is bank and cash. Ash has various accounts with 2 banking institutions. It holds a number of long-standing accounts with Silver Oak Bank, and a number of new accounts have been opened during their Money Tree Bank. So there are 2 banking institutions. It holds a number of long-standing accounts with Silver Oak Bank. Number of new accounts have been opened with Money Tree Bank. However, the management of Ash has refused to grant Willow and Company permission to obtain bank confirmation letter from Money Tree Bank. We have asked for explanation, but have not received a satisfactory response. Okay. The management of Ash, who is Ash? The client. The management of Ash has refused to grant Willow and Company. Willow and Company is the audit firm. They have refused to grant them permission to obtain a bank confirmation letter from Money Tree Bank. You have asked for explanation, but have not received a satisfactory response. The area of bank and cash has been deemed as a high risk due to number of errors which were found during prior year audit. The audit partners therefore emphasize the importance of the procedures performed in this area of the financial statements. Okay. Second, share capital. During the year, Ash issued $100,000 when equity shares. Ash Company maintains all of its records in this area. The audit partner has raised concerns over whether the transactions have been carried out in compliance with appropriate laws and regulations. This is it. The data has ended. Mind it, these are real exam MTQs, right? So you need to pay attention to them carefully. And obviously, we will be delivering in a way that small concepts will be rediscussed, revised, and then we will solve the questions. So in case you have any particular problems, you can always refer later the recording, okay? So, summary. It is 1st July. I'm reading the question again. It is 1st July. You are an audit supervisor of Willow. So if you're an audit supervisor of Willow, Willow is the audit firm. You are involved in the audit of Ash. Ash is the client. For their ended 31st May 2005. You have been allocated responsibility for the audit of bank and cash and share capital. You have been asked to perform audit of 2 areas, bank and cash, share capital. Bank and cash. The thing is, Ash has various accounts with 2 institutions. It holds number of accounts at Silver Oak Bank. Number of new accounts have been opened with Money Tree Bank. Management has refused to grant Willow permission to obtain bank confirmation letter from Money Tree Bank. You have asked for explanation. The area of bank and cash is very high risk. Okay. And share capital, Ash issued 100,000 shares. Ash maintains all records. Audit partners raise concern over whether transactions have been carried out in compliance with laws. Question number 1. You are reviewing the audit plan for Ash Company and have allocated a number of procedures to be performed on bank and cash to your audit assistant. So you are reviewing the audit plan for Ash Company. You have allocated a number of procedures to be performed on bank and cash to your audit assistant. In order to help your audit assistant perform the work, you want to give him more detail regarding procedures. Which type of audit procedure is being demonstrated by each of the following tests included in the audit plan of Ash Company? So the question is this. From here, the question starts, which type of audit procedure is being demonstrated by each of the following tests included in audit plan of Ash? Obtain bank reconciliation and cast the total to ensure arithmetic accuracy. So one test is obtain bank reconciliation and cast the total. Cast means totaling to ensure arithmetic accuracy. Then obtain bank confirmation letter from Ash bankers. And 3, perform cash count for comparison with the results of cash count by Ash. The options are reperformance, inspection, recalculation, external confirmation. For the second test as well, obtain bank confirmation, there are 4 things: reperformance, inspection, recalculation, external confirmation. Perform cash count for comparison with results of cash count by Ash company. This test, again, you have to select reperformance, inspection, recalculation, external confirmation. So I am repeating the question number 1 again. Which type of audit procedure is being demonstrated by each of the following tests? Which procedure is demonstrated by each of the following tests? Number 1, obtain bank reconciliation and cast it to ensure arithmetic accuracy. Either it is reperformance, inspection, recalculation, external confirmation. Obtain bank confirmation letter from bankers. Again, it's reperformance, inspection, recalculation, external confirmation. Perform cash count for comparison with results of cash count by Ash company. Perform cash count for compare with results of Ash company. Either it is reperformance, inspection, recalculation, external confirmation. Now, 2 marks. Some things are very easy, right? Obtain bank confirmation letter from bankers. Is it reperformance, inspection, recalculation, or external confirmation? Everyone knows sending a confirmation letter to bankers is basically external confirmation. Okay, this was the most easiest thing, that sending a bank confirmation letter, it's not reperformance, it's not inspection, it's not recalculation, it's external confirmation. Obtain bank reconciliation and cast the total to ensure accuracy. Casting means totaling. Is totaling reperformance? You are not reperforming anything. Either it's inspection, you are not visiting anywhere. Is obtaining bank reconciliation and casting, totaling, it's external confirmation? No. So casting always comes in recalculation. Okay. And perform cash count for comparison with results of cash count by Ash. This is not external confirmation. This is not inspection. You might be confused between reperformance and recalculation. So performing cash count, counting cash, and then comparing with that of Ash company. Ash company has already done cash count. You're performing cash count again and then comparing results with what they have done. This is basically the reperformance. Okay, so this is the answer of MCQ number 1. Obtain bank confirmation letter, that's straight external confirmation. Casting, always recalculation, and perform cash count and compare with those of Ash company, that's reperformance. Okay. Mark it, please. There's one student asking which option. So dear, every MTQ doesn't have option. In every test, it has mentioned 4 things, and it is asking that which procedure is being demonstrated. So you just need to tick on the procedure. Okay. There's a general tendency that every MTQ will carry option. Okay, it's nothing like that, please. Okay. Question number 2. I really like question number 2. Your audit assistant has gathered the following audit evidence in relation to bank and cash. So your audit assistant. Okay. Your audit assistant has gathered the following evidence. He has gathered the following evidence in relation to bank and cash. So my audit assistant has gathered the following evidence in relation to bank and cash. Number 1, printout from Ash online banking system provided by the accounts clerk. So one evidence he has gathered is a printout of Ash online banking system provided by the accounts clerk. Then bank reconciliation prepared by audit assistant. Okay, bank reconciliation prepared by audit assistant. I don't know what is the requirement, but at the moment it's saying that your audit assistant has gathered the following evidence. Evidence number 1, printout from Ash online banking system provided by the clerk. Bank reconciliation prepared by audit assistant. Results of cash count performed by internal audit. And bank confirmation letter received from Silver Oak Bank. Which of the following options correctly ranks the audit evidence, starting with most reliable? Okay. Now, this is a very easy MTQ. That my audit assistant has gathered the following evidence. Assistant has gathered the following evidence. The first, printout from Ash online banking system provided by the accounts clerk. One evidence is banking system provided by the clerk. Second is bank reconciliation prepared by audit assistant. Third, results of cash count performed by internal audit. And fourth, bank confirmation letter. Which of the following options correctly ranks the audit evidence? You need to just state the rank of evidence starting with most reliable. Just take a minute. You need to rank them. All these 4 evidence, rank them and start with most reliable. Which is the most reliable? Just take a minute, try it, and then I will discuss. Okay, so the correct answer of this is option D. Now, if you see that you need to rank starting with most reliable first. Most reliable first. Okay. So there is a general principle taught in F8. Evidence is more reliable if it's external. So you see printout from banking system produced by the clerk, it's internal. Bank reconciliation produced by the assistant, my assistant has prepared internal. Cash count by internal audit, internal. Bank confirmation letter, external evidence is most reliable. So first one should be 4, most reliable should be 4th one. This limits the options to C and D. Okay, 4. And the weakest evidence is internal. So you see cash count performed by internal audit, that's internal. And printout provided by the clerk. Internal audit still may be better, but the clerk's evidence, internal evidence will be the weakest. So weakest is 1 and strongest is 4. So that's why 4 should come first, 1 should come in the end. The only option having this is option D. Okay, question number 3. Which 2 of the following actions should Willow and Company take following Ash refusal to allow Willow and Company to seek a bank confirmation from Money Tree Bank? You know, there was something mentioned above that management is not allowing us Management is not allowing us to seek a bank confirmation letter. Management is not allowing us to seek a bank confirmation letter. This was mentioned above. So which two of the following actions should Willow take following Ash's refusal to allow Willow to seek a bank confirmation letter? Now the client is not allowing us to take a bank confirmation letter. Which two of the actions we should take? So you need to select two options. Okay. The risk of material statement, including fraud risk, needs to be reevaluated. The audit plan must be revised and alternative procedures considered. A modified opinion must be issued on the grounds that insufficient evidence is available, and send the bank confirmation request without authorization as the bank communicates directly with the auditor. Now, just in MTQs, the technique is minimize your options. Okay. Now, this can never be the answer. D. This can never be the answer. Send the bank confirmation request without authorization. You cannot send any letter to bank without approval from the client. You know this, I think, in F8, right? So send bank confirmation without authorization, it's wrong. Okay. Now from 3, we have to select 2. Which two of the following actions should we take if we are not being allowed? Audit plan must be revised. Risk of material misstatement needs to be reevaluated. A modified opinion must be issued. Okay. This is also an extreme measure, that if they are not allowing you to gain evidence from bank, modify your opinion. No, you have to try your best to gather evidence from alternate sources before modifying your opinion. So the 2 leftover options are A and B, and this is going to be your answer. Now, if you have any questions regarding MCQ number 1, 2, 3, please ask, then we can move forward to 4 and 5. I will firstly answer to Dinesh. Dinesh, you cannot enter bank statement into it because you cannot tailor the requirements, because once you tailor the options, the requirement and opinion becomes different. So it's better to answer as it is. There are many people who are asking that why there is not option C. Okay, so if the client is not allowing us to gain evidence directly from the bank, we should try to gain evidence from other sources and try and resolve the matter. Okay, if that is not possible, then we should modify our opinion. Okay, so this is completely wrong that we directly modify our opinion. There's a student, Ali Malik, who has raised a very important point in the group, that you need to think of your answers and keep it with yourself. What people are doing is they are writing answer, and when I'm giving them time to solve, and just putting that answer on the group or in chat, so others don't get the time. So please keep it with your own. So you see, sometimes in MCQ, there is not very much thing available that we can fight on the correct answers. Sometimes the better strategy is to eliminate the obvious wrong ones and get to the answer. Okay, bank confirmation is not being allowed. Correct. This is inability to obtain site. You will modify opinion, but later. First, you have to think of alternative procedures. Okay, and fraud risk needs to be reevaluated, that whether there is a risk of fraud or not. Send bank confirmation without authorization, that's wrong, and modified opinion directly is wrong. Okay, So C and D should be eliminated, and then we will reach towards A and B. Okay. There is a student who's asking question regarding question number 2, that, okay, we got it that bank confirmation is most reliable, number 4, and clerk 1 is the least reliable one. So what about 2 and 3? In 2, bank reconciliations prepared by the audit assistant, right? Audit assistant. And cash count is performed by internal audit. Internal audit is company's department, right? So they will be less reliable, and audit assistant, my person, will be more reliable. So 2 will be more reliable than 3, so 4 to 3. Question number 4. You have been given the following bank reconciliation prepared by Ash Company. Okay. So look at the bank reconciliation prepared by Ash Company. Who is Ash Company? Ash Company is not the firm, it's the client. So following bank reconciliations prepared by Ash Company. Okay. Balance as per bank statement is 4,200. Unpresented checks 1,200 negative, outstanding lodgements 3,200 positive, and balance as per cash book is 6,200. This is the bank reconciliation prepared by the client. Balance as per bank statement, balance as per cash book, that's what bank reconciliation is. The following issues have been identified during the testing of bank reconciliation. Okay. Following issues have been identified during testing of reconciliation. Checks totaling 300,000, which were not posted until 2nd June 2005, are included in the cash book at the year end. Checks totaling 300,000, which were not posted until 2nd June. You know, year end is 31st May. As per the information, year end is 31st May. So checks totaling 300,000, which were not posted until 2nd June, are included in cash book. So they have included 300,000 checks in cash book at year end, which were not posted until 2nd June. Customer payments totaling 700,000, which were paid into the bank on 3rd June, are included in the cash book at the year end. So customer payments totaling 700,000, which were paid into the bank on 3rd June. 3rd June again means after the year end, are included in cash book balance. Okay. Following issues have been identified during the testing of bank reconciliation. Checks totaling 300,000, which were not posted until 2nd June, are included in cash book. And customer payments totaling 700,000, which are paid after year end, 3rd June, are included in cash book. Okay. Bank charges for May totaling 100,000 were not charged by the bank until June 2005. Bank charges for May totaling 100,000 were not charged by the bank until June 2005. What is the resultant effect on the bank and cash balance as a result of these issues? Okay, try it. 2 minutes. There are some checks totaling 20,000 posted until 2nd June are included in cash book, and customer payments which were paid on 3rd June are included, and bank charges were not charged by the bank until June. What is the resultant effect? Just think. Okay, there's a very interesting question from a student that why they are asking account sum in an audit exam. Okay, brother, you need to have a sound research on audit risk questions, because sometimes you will get an audit risk question to compute ratios. If you don't have accounting knowledge, I'm afraid you won't be able to do that. So it's a very generalized thing that an audit exam, accounting based questions can come. So a bank reconciliation has been prepared and there are some issues identified. Checks totaling to 300,000, which were not posted until 2nd June, are included in cash book. Okay. Checks totaling 300,000. They were not posted until 2nd June. Now, checks is basically an outflow. You can see. Checks are an outflow payment, because there is a concern sometimes that checks is receiving checks or paying checks. So checks is negative, that means it's a payment. So checks totaling 300,000, payments 300,000, which were not posted until 2nd June, year end is 31st May. So payments of 300,000, which are not posted until 2nd June, that means not occurring until 2nd June, are included in cash book. The payments are included in cash book. That means the cash book balance is unfairly reduced by 300,000. Because this transaction is posted on 2nd June, it should not come in 31st May balance. It's posted on 2nd June. It should not come in 31st May balance, but checks totaling 300,000, the payments totaling 300,000 are included in cash book. That means you have incorrectly reduced the balance by 300,000. Okay. And customer payments totaling 700,000, which were paid. Customer payments is a receipt, right? See, the words are trapping you. Customer payments. You say, oh, it's a payment. No, customer payment. Customer payment means receipt. Totaling 700,000, which were paid into the bank on 3rd June, again after year end, are included in cash book. So receipts of 700,000, which was supposed to come on 3rd June, has been included. So you have incorrectly reduced your payments by 300,000, and the receipts have been overstated on 31st May by 700,000. Okay. And bank charges for May 2005 totaling 100,000 were not charged by the bank until 2nd June, until June 2005. So bank charges were not charged by the bank until 30th June. Is it written it was included in cash book? No. So bank charges for May totaling 100,000 were not charged by the bank until June, and we haven't included them anywhere. Since they were not charged until June, we should have not include them, and it's nowhere written that we have included them. For point number 1, it's written that checks, that is a payment of 300,000, it was supposed to be posted on 2nd June after year end. We have included them in cash book. That means we have made a payment of 300,000, which is wrong. We have reduced the balance by 300. And customer receipts totaling 700,000, which was to be coming on 3rd June, we have included them in cash book. That means we have increased the cash book balance by 700. But for bank charges, they were not charged by the bank until June, and we haven't included them anymore. What is the resultant effect? The resultant effect is that for point number 3, we haven't included, and it should not come because they were not charged by the bank until June. It should not come. We haven't included, correct? But we have made a payment of 300,000 included in 31st May. That's wrong. We have reduced the balance by 300, but we have increased the receipts by 700, which should not come. So the net effect is our balance is overstated by 400,000 because we made a wrong payment of 300,000 entry and a wrong receipt inflow of 700,000. Net effect would be if we have included this 700,000, our balance is overstated by 700, and we have made a payment of 300. That's wrong. So our payment gets reduced by 300. The net effect is cash balance will be overstated by 400,000. For the third point, there shouldn't be any effect. So checks, since it's checks outflow, as I can see in the bank reconciliation, I should have included on 2nd June, but it's included in cash book. That means I've made a payment of 300,000 in this balance. My balance is reduced by 300 and I have increased it by 700. So my balance is overstated by 400. For the third point, the impact won't come. Why? Because bank charges were not charged by the bank until June, and they should not come in the cash book, and it's nowhere mentioned it's included in the cash book. Question number 5, which of the following audit procedures would address the audit partner's concern in relation to the share issue? Now you see the audit partner had a concern in relation to share issue. Let me show you that. You can see this. During the year to 31st May, Ash issued 100,000 shares. Ash maintains all of its own records in this area. The audit partner has raised concern over whether transactions have been carried out in compliance with appropriate laws and regulations. Which of the following procedures would address the audit partner's concern in relation to share issue? Inspect board minutes for evidence of review regarding terms and approval of the share issue. Inspect Ash constitution documents for evidence that the share issue is permitted. Obtain a written representation from management to confirm share issue in compliance with laws and regulations. Agree the quantity and recipients of share issue to Ash share register. Now, if we talk about the correct answer of this one, now the examiner has clearly stated that sometimes all options would seem correct, but you have to select the best one, right? Now, which of the following procedures would address the audit partner's concern in relation to share issue? Inspect board minutes for evidence that terms and approval of the share issue. It's a valid procedure. You might have studied that to ensure share issue, we perform a procedure of board minutes. Inspect constitution documents for evidence that the share issue is permitted. Obtain a written representation from management to confirm shares in compliance. This is also a substantive procedure. B is also a substantive procedure. Agree quantity and recipients to share register. This is also a procedure. So all are procedures. But which procedures would basically address the concern? Now I'm going to show you what the examiner guidance is regarding this MCQ, because people sometimes don't believe the tutor, whoever the tutor is, when tutor says eliminate the wrong options and get to the correct answer. Okay, sometimes people don't believe them. So let me show you what examiner is guiding regarding this. Read this, please. Okay, so as you can see that even the examiner is guiding you not to fight with the question and go and find the correct answer. Eliminate the wrong ones. So if you eliminate the wrong ones, it says that board minutes is not basically giving you whether it's according to law. It just states that whether company has taken approval or not. Okay. The main concern, if you go and read the requirement again, see what was written. The audit partner has raised concerns over whether transactions have been carried out in accordance with laws. That was the concern of the partner, that whether transactions are in accordance with laws. So as far as you talk about whether the transactions are in accordance with laws, this can only be verified by B or C. That written representation, that whether it is in law, or constitution, whether it is in law. The partner had concerns regarding legality. So only B and C, but C is a weak evidence that just take from management. So B is going to be more likely the more evidence. This was the answer of MTQ number 1. Okay, please read the scenario of this MTQ number 2. Let's start MTQ number 2. Constitutional documents are legal documents. Okay, the question states, initiates B. So MTQ number 2 states, it is 1st July 2005. You are an audit supervisor at York and Company. Now you are an audit supervisor at York and Company. So who is York and Company now? York and Company is the audit firm. You are the audit supervisor at your company, it's the audit firm. You are involved in the audit of Lancaster. So who is Lancaster, the client? You are the supervisor at your company. So it's the audit firm and you are in the audit of Lancaster. That's the client. For their end at 31st May, the company owns a significant amount of non-current assets, including a number of properties. Okay. Additions, disposal, depreciation. Lancaster depreciates its properties on a straight line basis at a rate of 5% per annum. So properties depreciated on a straight line basis at 5% per annum. The draft depreciation charge on buildings for 2005 is 2 million compared with 1.7 million in 2004. On 31st May, property A was sold for sale proceeds equal to 40% of its original cost. On 31st May, property A was sold for sale proceeds equal to 40% of its original cost. The property initially cost 6 million. So property cost 6 million, had been owned and depreciated for 7 years. So property was sold for 40% of original cost. The cost is 6 million. It had been owned and depreciated for 7 years. The audit program includes the following tests to be carried out in relation to additions made. Agree a sample of additions recorded in non-current assets register to the cash book and purchase invoice, ensuring that the purchase date is accurate and is recorded in the correct amount. So first procedure, the audit program includes the following tests. Agree a sample of additions recorded in the register to the cash book and purchase invoice, ensuring purchase date is accurate. Compare total budgeted additions to actual additions there, investigate and corroborate any significant difference. Revaluation. On 31st May, the directors had all of the company's remaining buildings revalued by an external expert. The detailed audit approach states that your company will rely on this valuation as part of current year audit procedure. So the case in front of me is that I am the audit supervisor at York & Company. York & Company is the audit firm, and I'm involved in the audit of Lancaster as the client. There are some issues regarding additions, disposal, and revaluation. Question 1. Which two of the following procedures would test for overstatement of non-current assets? Which two of the following audit procedure would test for overstatement of non-current assets? It's a very easy question. Agreed disposals recorded in non-current asset register to cash book and sales invoices. Physically inspect a sample of assets selected from the non-current asset register. Inspect a sample of assets found at location and agree to non-current asset register. Inspect the condition of assets held to determine need for any impairment. Okay. Now, which two of the following procedures would test for overstatement of non-current assets? Where is non-current asset recorded? My question, where is non-current asset recorded? Non-current asset is recorded in non-current asset register. Okay, non-current asset is recorded in non-current asset register, right? So, which two of the following would test for overstatement? Now, see, it's a general practice that companies include their non-current assets the higher value. I'm sorry, there was a disconnection problem. So, which two of the following audit procedure would test for overstatement? Now, it's a general tendency of companies that they record their assets at a higher value than originally it should be. Why? To overstate their assets. So, what suitable procedures would be to check whether they're overstated or not? Okay. Inspect the condition. Okay. Because if the condition is bad, it can clearly be stated that whether they have recorded at overvalued or undervalued. Okay. And you can physically inspect a sample of assets selected from the non-current asset register. Okay. Test number C would check completeness. Okay. It would check for completeness, option C. And A would check whether the disposals are recorded correctly or not. It won't check for overstatement. The correct answer should be B and D. Viti, if you haven't removed, then it should be mentioned that you haven't removed. We cannot suppose on your own that it was not removed, right? Archie, it may be the case that an asset is not present, but still recorded. Yes, it will also test existence as well. Okay, question number 2. Which of the following assertions are tested by the procedures included in audit program for additions? Which of the following assertions are tested by the procedures included in audit program for additions? Completeness, classification, existence, accuracy. So which of the following assertions are tested by the procedure included in audit program? For that, I have to see the audit program. See, this is the audit program. The audit program includes the following tests to be carried out in relation to additions. The audit program includes the following tests. The first is agree a sample of additions recorded in non-current assets register to cash book and purchase invoice. Okay, ensuring that the purchase date is accurate and is recorded at the correct amount. Okay, and second, compare total budgeted additions to actual additions, investigate any differences. The audit program has 2 tests. Audit program has 2 tests. Number 1, agree a sample of additions included in non-current asset register to cash book and purchase invoice, ensuring it is accurate and included the correct amount, compare total budgeted additions and investigate any difference. The requirement is, which of the following assertions are tested by procedures included in the audit program? Now, assertion 1, completeness. What does completeness means? It means that the thing should be recorded in one area and in the other area correctly. It must be same. Okay. Classification, it must be recorded in the correct head. Existence, whether it exists or not. Accuracy, it's at the accurate amount. Okay. So if you see the first test, agree means compare. Okay. For comparison, it's completeness. Whenever agree or compare comes, it's for completeness. We are checking its accuracy, recorded at the correct amount, valuation. Okay. And compare from last year. We are checking completeness here because agree is coming. We are checking for existence when we are going and checking additions. We are checking accuracy and valuation. Classification states it should be in the correct head. Asset should be in assets, liability should be in liabilities. Both of these tests are in stating anything regarding correct head. So answer for this should be C. Without classification, everything is being tested. You can go and see both the tests in the program. When you go and inspect assets and asset register, it also tests existence. MCQ number 3, 4, 5 are very easy. You are now considering substantive audit procedures for depreciation across all categories of non-current assets. So you are now considering substantive audit procedures for depreciation. Now, companies considering substantive procedures for depreciation. Which two of the following are substantive procedures for depreciation? Which two are the audit procedures for depreciation? This is really easy. You can just learn the substantive procedures of depreciation and got to know that what are the two substantive procedures of depreciation. Review non-current asset register. No. To test depreciation, we don't review the non-current asset register. We see the register for valuation, we see the register for existence, we see the register for completeness, but not for depreciation. Perform proof in total of the depreciation charge, including financial statements, investigate any difference. Yes, this is written in the text as well, that you need to recalculate the depreciation, perform a total in proof of depreciation. That means recalculate depreciation. This is one procedure. Review board minutes. No, board minutes are for approval of additions, disposal. They're not for depreciation. Discuss with management the reasons for 300,000 difference. Yes. Depreciation compared with last year. This can be an answer. Perform a proof in total, recalculate depreciation. This can be an answer, but asset register doesn't tell anything about depreciation and board minutes don't tell anything about depreciation. So there is no logic for question number 3 because it starts with two substantive procedures of depreciation and two procedures of depreciation are written in the text. Anywhere in the notes you can find them. Okay, question number 4. Again, some people might say why accounting is coming, but accounting can come. It's basic F3 financial accounting level. Recalculate the expected loss on disposal of property A. Expected loss on disposal of property A. Now, if you know, we calculate the gain or loss on disposal as the difference between net book value and scrap value. If anyone asks you gain or loss on disposal of property A, gain or loss is the difference between net book value and scrap value. Okay, I have to read property A again for this. See, property A was sold for sale proceeds equal to 40% of its original cost. The property cost 6 million. Okay, property A was sold for 40% of original cost of 6 million. So it was sold for 40% of original cost. 40% of original cost means 40% of 6 million. It's 2.4 million. It's sold for 2.4 million and had been owned and depreciated for 7 years. You depreciated that for 7 years. And depreciation is at straight line basis, 5% per annum. Let's move to the job. To find gain or loss on property A, net book value scrap difference. Okay, so it was sold for 40% of original cost. So original cost was 6 million. You sold it at 40% of original cost. That means you sold it for 2.4 million. 40% of original cost, you sold it for 2.4 million net book value. Now, how do we get net book value? How do we get net book value? I'm calculating net book value here. You know, net book value is basically cost less accumulated depreciation. So cost of the asset is 6 million minus accumulated depreciation. Depreciation is at 5% straight line. So 5% straight line means 6 million was the cost. Okay, 6 million was the cost. Depreciation is at the rate of 5%. So I will multiply it with 5%. $6 million is the cost. Depreciation is at 5% straight line per annum. So I will multiply the 5% to get 1 year's depreciation. And it's on for 7 years. That means for 7 years, I have depreciated it. So you see 6 million was the cost. $5 per annum is the depreciation. So 6 million into 5%, it's 1 year's depreciation, right? 6 million into 5%, it's 1 year's depreciation. And we have owned it for 7 years. So 2.1 million is the depreciation charge for 7 years and 6 million is the cost. 6 million costs less accumulated depreciation for 7 years, it's 2.1 million. So the net book value is 3.9. Net book value is 3.9 million. And you have scrapped it for 40% of initial cost, 2.4 million. So the loss on disposal is gonna be $1.5 million. So I've repeated the whole process in detail. Cost less accumulated depreciation is the net book value compared with scrap to get gain or loss on disposal. Loss on disposal is net book value and scrap. Scrap value is 2.4 million, 40% of cost, 40% of 6 million, it's 2.4. Net book value, cost less accumulated depreciation. Cost is 6 million, accumulated depreciation 6 million, 5% per annum for 7 years. Okay, please copy it. Any questions you can ask. Yes, it's asking in millions, Umar. So answer would be wrong. Okay, last question. In respect of the revaluation, which two of the following statements regarding reliance on external expert are true? So again, you need to state which two of the following statements regarding reliance on external expert are true. Sometimes we hire the services of an expert. So which two of the following statements regarding expert are true? In line with ISO 620, using the work of expert, reliance can only be placed on an expert appointed by your company. This is wrong. There is no necessity that expert has to be appointed by your company. No, expert can be appointed by anyone. So there is nothing like that taught to any of you in your classes that reliance can only be placed on an expert appointed by audit firm. No, expert can be anyone. Obtaining the valuation report would constitute sufficient appropriate audit evidence. Let's keep an hold on it. Reference to the work of external experts should not be included in audit report. Okay, this is true. If you read the chapter using the services of an expert, it's clearly mentioned that either you used internal auditor or you used expert. The reference must not be included in audit report because auditor is responsible for everything. Reference of external expert or internal audit should not be included in report. And the objectivity means independence of the valuer must be assessed before placing reliance on the valuation report. Obviously, you need to check his license, his credibility, his independence before placing reliance on his work. So C and D should be correct. Okay. Why B is incorrect? Because obtaining the report only would not constitute sufficient appropriate audit evidence. It says that you need to gather further evidence as well. Okay, but A is perfectly wrong. It's nothing like that, that expert has to be appointed by us or them, anyone. But C and D are the two statements. We should not include that you have used expert or internal auditor in audit report, and independence must be assessed before placing reliance on his work. No, Archie, you're wrong. No, again, that comes to the same thing, that if you mention his name, that means you are referring to him. And standards say you cannot refer expert. Okay, as far as these two people, VT Kapoor and RG, who are referring that we can refer to the name of expert. So better, I think you should go and refer to ISA 620, okay? And ISA 620 would clearly address your concern, okay? And I would also advise these two people to read point number C. Reference to the work of external experts should not be included in auditor's report. Okay, so read things carefully. That's a general tendency of students. They don't read the things properly. Okay, reference to work of experts should not be included in audit report. So audit report never references the work of expert. Okay, and better read ISA 620. MTQ number 3 is related to subsequent events, and this is the last MTQ which we are going to discuss. Okay, so let's start. It is 1st July. You are an audit manager of Brown and Green Company. So if you are an audit manager of Brown and Green Company, that means Brown and Green Company is the audit firm, right? It is 1st July. You are an audit manager of Brown and Green Company. You are currently working on completion stage on the audit of Strawberry. You are auditing Strawberry, client listed company specializing in manufacturing of smartphone accessories for their end 31st March. Draft financial statements show revenue of 500 million, assets of 210 million. You are reviewing the outcome of audit work documented by your team. You have become aware of the following two issues. You know, in subsequent events, some issues come. Reduction in sales. On 18th March, the board of directors approved a strategic plan which will help it increase the sales of smartphone chargers in the future. Strategic plan is to upgrade Strawberry's manufacturing facilities, which will allow it to manufacture higher quality and technologically advanced products. To fund the planned upgrade, the company issued equity share capital to general public in May, which generated cash of 4 million. So year end is 31st March. On 18th March, before year end, board of directors approved a strategic plan which will help increase the sales. And to fund the planned upgrade, company issued equity shares in May. Shares were issued after the year end in May. Okay. Issue 2, letter from environmental agency. Strawberry received a letter dated 15th May. Letter is received on 15th May, again after the year end. It's a subsequent event, from a government agency advising that water samples taken from the public lake close to Strawberry's manufacturing site have shown traces of harmful substance which produced during its manufacturing process. Agency has concluded Strawberry is the source of the contamination and is liable for a fine. The board has denied any responsibility and have forwarded the case to the company's legal advisors. So year end is 31st March. And on 18th March, before year end, they approved the strategic plan and issued shares in May after year end for 4 million. And second, there is a letter received after year end from government agency stating that you are entitled to a fine. Okay. Question 1. Which of the following statements correctly describes Brown and Green's responsibility in relation to subsequent events occurring between date on which audit report is signed and the date on which financial statements are issued? So which statement correctly describes Brown and Green's responsibility in relation to subsequent events? You know, auditors have responsibility in subsequent events, right? So which of the following statement correctly describes auditor's responsibility in relation to subsequent events occurring between date of report and date of financial statements? A, Brown and Green should obtain sufficient appropriate audit evidence and design audit procedures to ensure all subsequent events are identified. Brown and Green should obtain a list of subsequent events from directors of Strawberry and include these in written representation letter. Brown and Green has no duty to perform any procedures after date of report. Brown and Green should discuss any subsequent events they become aware of with the directors to determine whether financial statements need amended. Which of the following statements correctly describe what auditors should do? In case of subsequent events, you might have studied that we need to discuss any subsequent event we become aware of to check whether FS need amendments. So in this case, as per standard, answer should be D. Option C is wrong. Auditor has no duty to perform procedures. No, he has duty. They should obtain a list of events from directors. No. They should start gathering evidence on events. No. They should discuss subsequent events which they become aware of and ask directors whether FS need amendment. This is correct. Actually, I cannot comment on stuff like if this would have been this, if this would have been this. It would be better if you just prepare a proper case and then ask that what would be in this case, because molding a question and modifying a question doesn't make sense. Okay, question 2. Explain by choosing the relevant boxes in the statements below how the issue of share capital should be treated in the financial statement. So how the issue of share capital should be treated in financial statements. How the share capital should be treated in financial statements. The issue of share capital is an adjusting / non-adjusting. You need to select it's adjusting or non-adjusting and needs to be adjusted / disclosed in the financial statement. You need to select it's adjusted or disclosed. Okay. So if an event occurs or it has evidence of conditions before year end, it says adjusting. And if it doesn't have evidence, it's non-adjusting. Okay. So share capital was issued in May and a year end was 31st March. That means share capital was issued after year end. And that means in year end, there was no evidence of conditions that this will be happen. So we will select it's a non-adjusting event. And when it's non-adjusting, it will be disclosed in financial statements. Because year end was March and you issued share capital in May. So after year end, it's a non-adjusting event, will be disclosed. Aman, because standards are not saying anything. Standards are saying that you need to discuss with management. That's the option D. Okay, question number 3. The audit team has performed various substantive procedures in order to find sufficient appropriate audit evidence relating to potential fine for environmental damage. Which two of the following are appropriate audit procedures to perform in respect of the letter from government agency? So which two are audit procedures, appropriate procedures in respect of government letter? Send a letter addressed to the government agency. This is wrong because government has already sent you a letter. Why would you send a letter to the government? Okay. Examine post-year and board meeting minutes to identify any reference to further issues. Yes, in case of fines and penalties, there is a substantive procedure of board meeting. This can be, okay. Review correspondence with legal advisors. You might have studied that whenever there's a fine, penalty, or legal case, we need to have a legal advice, okay. Test the effectiveness of client's internal control system. Testing controls has no relation to procedures, substantive procedures. Okay, testing controls has no link to substantive procedures. So testing internal controls is basically TOC, not substantive. So B and C will be the correct answer. That whenever it is a fine, penalty, legal advice, board minutes, these two can be the procedures. Manur, can you just please elaborate what will we gain from A? Government has sent you a letter that you are in breach. Okay, why an audit firm would send letter to government again? Please go and research and read in detail, Archie, that can we give reference to the work? Again, I'm highlighting reference to the work. Please read it and get back to me after the class, okay? Now, question number 4 is in front of you. Question number 4 is in front of you. Assuming issue 2 is a material subsequent event. Assuming issue 2 is a material subsequent event, match the relevant audit opinion to the following two outcomes. Now you just need to match. Assuming issue 2 is a material subsequent event, match the audit opinion to the following two outcomes. Now what are the two outcomes? Audit opinion is unmodified with EOM para, then qualified, then adverse, then disclaimer, then modified with EOM para. It is probable that the government agency will win the case, but as the letter was received after the year end, the directors do not plan to account or disclose it in the financial statements. Okay. And outcome 2, it is possible but not probable that the government will win the case. Therefore, the directors have disclosed the matter in financial statements. Okay. Outcome 2 is very easy. Issue 2 is a material subsequent event, right? Issue 2 is a material subsequent event. So match the relevant opinion to the following two outcomes. In outcome 2, it's assuming issue 2 is a material subsequent event. It's material, right? Outcome 2, directors have disclosed the matter in financial statements. If directors have disclosed, that means they have done correct. One matter requires disclosure and they have disclosed. Have they done anything wrong? No. The opinion has to be unmodified. Okay, there is nothing else with unmodified. I have to select this because if directors have disclosed something, and that's what they're supposed to do. A matter requires disclosure, and they have disclosed. The opinion has to be unmodified. Okay. For outcome 1, the matter is material, but the directors do not plan to account for or disclose it. They don't plan to adjust or disclose. Now, if they are not disclosing or accounting a material event, okay, material means material but not pervasive. Material can be material but not pervasive, or material pervasive. But if only material is written, examiner states it's material but not pervasive. In such a case, the opinion has to be qualified. You cannot write modified, because in modified everything comes qualified, adverse disclaimer. So if something is material, and material means material but not pervasive, it should be qualified. And when they have disclosed everything, it should be unmodified. Okay.
सर 1 महीने हो गया आपसे
Okay. Last MCQ, question number 5. The 2 issues will be included in a written representation from management. All audit work will be finished by 31st July. The audit report is due to be signed on 28th September. Strawberry's board plans to issue financial statements on 21st October, which will be followed by AGM on 30th October. Which of the following would be most appropriate date of directors of Strawberry to sign the written representation? So which would be the most appropriate date for directors to sign written representation? Okay, there are many dates in the question. The 2 issues will be included in written representation. All audit work will be finished by 31st July. Audit report will be signed on 28th September. Strawberry's board plans to issue financial statements on 21st October and AGM is on 30th October. Okay, so which of the following would be most appropriate date of directors to sign written representation? Now, as per standard, directors must sign written representation. Directors must sign written representation on the date at which audit report is signed. They must sign written representation on the date audit report is signed. So audit report is signed on 28th September. They must complete all work by 28th September. Correct answer is B. Okay, so you have done approximately 30 marks worth of practice, and don't take these MTQs non-serious. Before the exam, just revisit this video. I will share this video on the group as well, because you don't know, some of these MTQs might eventually pop up in the exam as well. Okay, so these are very important. Okay, please make sure. We are ending our class now. The group settings will be open after a while. If you have any queries in the group, you have my number as well. Okay, you can contact me if you need any help in any other area, and I have a complimentary video of that area. I will be quite happy to assist you. Okay, and if you feel any further queries, please feel free to ask me. Okay, have a very nice evening. Take care. Bye.